Well, g'day there everybody right around the world. Thanks a lot for joining me as at this Wednesday afternoon market recap. We still have about an hour's left of trade in today's session. However, this video is going to be recapping a lot of the individual stocks that we're in, also the market indices too. We have made and placed some absolutely phenomenal trades at the moment that are continuing to break above their respective breakout points that are bringing in some pretty healthy returns as at this recording. So what I'm going to do again is just recap those trades and talk about, in essence, the trade setups. This will not deviate from our top 12 individual trade list. I am going to go through those stocks that we look at in that pro analysis class. If you have any questions about this analysis or the trade setups or the execution, please email me, success@pivotpoint-trading.com, because the majority, if not all of these stocks in our top 12 list over here on the left-hand side, if they have triggered, they are sitting pretty fairly. And again, very proud upon the analysis which we placed these trades, and really we're really gaining, I guess, the benefits or reaping the benefits of the analysis that we have sown during that of this support sort of holding, or at least retesting, and what appears to be that of the continued bounce. So in no particular order, this is the S&P 500. Generally, I start with the Dow Jones Industrial Average. However, this was the chart that was open on my screen, so I am going to begin with this. Also, let me just say, yesterday, I was doing a market analysis and also individual stock recap. That does take into consideration some of those other listed equities and also ETFs that we look at or have looked at in the past from time to time. What I did, I uploaded the video and I believed I pushed the publish button. However, turned out I did not. So I went about my day, and about 12 hours later, I realized that the actual video hadn't posted to YouTube. So it was really just one click of the button, hence the delay. You might be sort of scratching your head as to sort of the tense that I'm talking in. It was during the market. I believe there was about 15 minutes less left in the session. However, the update was posted about 12 hours after market close. That is my personal fault. I was shocked when I realized that, but all I had to do was open up, of course, that tab again and then hit the publish button. So that was completely my fault, and I apologize for the delay as at the upload on Tuesday afternoon. So what I'll do, let me just run through some of the market indices. Again, please email me, success@pivotpoint-trading.com. Also, pay attention to that pro class, because again, a lot of this analysis and trade execution has stemmed from that weekend class, which I do every Saturday. Really what we do during the week is recap what we spoke about during the week, or over the weekend, pardon me, and go through really the trade management, so to speak, of a lot of the trades that we analyze in great detail each and every Saturday. So let's move into the market indices. As at the current juncture, with about an hour left in the session, we see the S&P 500. It is up very close to 30 points. What we are doing, and I've spoken about this in the past, is pushing above definitively this little swing high over here. This is fantastic. This is a really good continuation signal, or the first continuation signal that we have been looking for quite some time. What we've been doing, as you are all very well aware, is coming back down and retesting this support very close to 2,600. The last video or major market address I left you with was hammers, hammers, hammers at this particular candlestick here, which coincidentally is a hammer. And then, of course, when we saw the follow through, this was Friday last week, I uploaded another video saying, has the market turned? And it looks to be, at this particular time, the answer to that is yes, yes, it has. So you can see we've broken above this swing high. We're back above a lot of our entries that we have been in. Also, there was a lot of people, including myself, who positioned themselves during this first or the second retest of this 2,600 handle on the SPY. So again, going back into this, we're closing, or very close to at the moment, 2,700. We've overtaken this swing high, and you can see the next sort of resistance area that we're eyeing off is just shy of 2,725. If we get above this, be prepared to see this market move higher very quickly, very quickly. So I do hope that you are positioned into market indices. Those returns on the markets alone through derivative contracts or options are absolutely phenomenal, especially if you positioned yourself after this candlestick, or even as far back as 2,600, if you didn't mitigate some of the trade up here and take a portion of those profits. So again, there's no real reason to be bearish on these markets. You can see, of course, the continuation of these white candlesticks after this 2 or 3 day reversal pattern, whether or not you want to call that a morning star reversal or simply just 2 reversal candlesticks being the hammer and then the long day sort of engulfing Morobozu candlestick, the direction at the moment is clearly to the upside. And also what I've been speaking about most recently are these exponential moving averages. I said a lot of short-term traders will try and position themselves off from those sideways exponentials, especially that 50, thinking that they're going to catch the rollover. However, what they fail to recognize is the larger picture being that of the swing oscillators that are clearly giving us and registering buy signals. And the good news is that this is in its infancy. They're not even anywhere close to overbought yet. So that's telling us essentially that there is a lot of fuel in the tank for this market to rise. Now, for those of you who've been listening to me on this public forum here on our YouTube channel, you will understand that I have been speaking till I am blue in the face about really these open windows, 2,852. That is where I believe the S&P 500 is going to move to. It's not going to happen this week. It may not happen next week. It may not happen in the month of May, but most likely, all things considered, we may get up to those resistance points by June or the end of June. So again, that respective area on the Dow Jones Industrial Average is all the way up here at 26,435. Most recently, I was talking about how there's roughly 2.2 thousand points from really the most recent entry all the way up to that target area as well. So when you see these nice sort of daily gains of 182, really it's just taking away from that 2.2 figure. I'm not sure what that figure is at the moment. The difference between 26.4 and 24.5 is going to give you that. But at the same time, the risk and reward ratio is still rather nice if you want to break it down on the S&P, the Dow, or the NASDAQ as well. I think you get the picture of the market structure. What I prefer to do right now is move into the individual trade setups that we've been speaking for quite some time. I know it can become a little bit frustrating when you have to sit through the actual setup, but that's what makes profitable trading worth it. I mean, really anyone can sort of wake up one day and place a couple of orders on, a stock that they're following or a market indice, but essentially have no real sort of analysis behind it. The beauty of analysis, and especially technical swing trading, is that you can learn how to time the markets and time these types of moves. So again, our basic structure on the market, as simple as it is extremely effective. You can see a lot of these stocks rallying and breaking to the upside. You can see Apple holding above both 183 and 184. We're closing up here very close to 187 already, and we haven't even got above this intra-session high, which was the first candlestick on Monday as well. So if Apple can hold this level, it's still not 100% confirmed yet, but as long as we sort of hold above here, roughly 176, this has got a great opportunity to continue. My target on Apple is 199, very close to that psychological round number of $200 per share. Amazon is treading water, but the good news is that we're still holding up above those exponential moving averages. Boeing Airlines, again, breakout entry, 336.62. We're trading at 344.70 as at this recording. So again, two very strong continuation signals. This was after the reversal candlestick just here. That coincided with the market basing. You can see the blueprint of this analysis. If I bring up those oscillating indicators, turning up the RSI, MACD crossing bullish, stochastics crossing up from the 50 midpoint line. So again, you can see how I guess the jigsaw puzzle of navigating the financial markets, taking your time, sitting through a lot of the sideways market shop, or at least understanding the environment upon which we're trading in, can really set you up to a benefit once we shake out, of course, what has most recently been rather a seller orientated or at least short-term dominated market, which is now shifting, the dynamic shifting back into the control of the bulls. Okay. Baidu, what is it doing? Breaking out above 258.59. This happened yesterday. We're more or less treading water today, down 55 cents as at this recording, but still a very healthy breakout and looking to hit our first target potentially by the week's close, which is very exciting. We've got Caterpillar. Bullish entry, 148.07, trading at 152.60 already. This is $4 and 50 something cents of profit from those contingent orders on the calls for Caterpillar. Phenomenal returns already. Good news, has it hit its target? No, it hasn't. Have any of these trades really hit their targets? No, not really, which is really good. It opens up the door for higher prices, which coincides, of course, with the market analysis. Okay, so you can see, first of all, we've been rather reluctant, if not straight outright, reserving the idea of actually trading bearish, and we've just been buying our time, patiently sitting on our hands, waiting for these bullish trades to set up. Pay attention, COP. 67.89, a little bit of a shooting star candlestick here, a little bit concerning. It was that of a short-term reversal candlestick. However, again, we spoke about these rising exponential moving averages. It looks as though COP today is definitively breaking out. Up $1.50 as at this recording. It's looking good. We're into fresh air. Not really all that much resistance. And again, the potential for this trend to simply continue. So again, place your stops in, put them below the 20 exponential, keep it below, of course, this candlestick here, and just simply allow the stock to move. Don't monitor it every minute of the day, every 5 minutes. Just leave it alone and forget about it. The analysis and the setup comes from when the market is closed. And what we do primarily is understand what's going on in the market indices themselves and then set the trades up in the direction of the market. Okay, very, very important. CVX, not in this trade, but got very close to 130.79. Not going to spend all that much time on CVX because simply we're not in it. We chose to sit out of it. Google, look at this candlestick. Look at this candlestick, up $34 today during today's session. This was after pretty much we nailed this on the head a number of occasions. 1,000 handled, the secondary retest, looking for the reversal candlesticks. A lot of people positioning themselves as close to $1,000 per share. Boy, how quickly does time change. We are trading now very close to $1,100 per share, $93 almost of intrinsic value if you entered, or 83 I should say, if you entered down at the lows, which coincided with, of course, the market reversal. Long day Morobozu candlestick breaking above the 50. What have I been saying? It's going to act as a magnet. 1,131 is the target on Google. This is phenomenally profitable. Phenomenally profitable. So I'm very proud of those. And I guess I'm congratulatory too to everyone who took this trade. It is starting to pay you off. If we get above these highs here, much like the market indices, coinciding above their mid-April highs, it's going to hit this target very, very quickly. So again, very proud to be speaking about that Google trade as well. Phenomenal, phenomenal trade. IBM, surprise, surprise, it's basing. More importantly, it's pulling away from that lower Bollinger Band. Either this is going to get stuck moving sideways between 140 and 144, or we're simply going to put in some form of a V-bottom reversal, which does have a lower probability. But ultimately, as long as 140 holds, we should see IBM come all the way back up to 158. Once we get up to this pivot, who knows what's going to happen next? But it's looking nice. At least it's stabilizing its support, and we might actually set up some form of a channel consolidation moving forward. It's still a little bit early to determine, but that's what it's looking to do. Netflix, no trade yet. Do I wish I placed my order, or at least the definitive entry at 319? Yeah, it would have been okay, but look, the structure wasn't there. It's very similar to the type of trade setup that we've been looking at on sort of Amazon. If I just placed a little trigger through here, hypothetically, you can see the parallels between Amazon bouncing off from those rising exponential moving averages and Netflix doing more or less exactly the same thing as well. 342 is what I'll be looking at. I'll be looking to obviously rejig that over the weekend, but that trade is brewing. Again, we're not in it yet. We're waiting for it, waiting for confirmation. But if we see that, that is going to be potentially another type of Google trade or a hybrid between Google and Apple, because Apple is breaking out above its all-time highs. I like the Netflix setup. It just hasn't done it yet. Is there something to be concerned about on this? Not so much. I mean, I've read and seen and listened to people saying how this is a head and shoulders. Simply not true. Not at this particular point. If we see a sell-off from this pivot and we come back down to 280 and then we start to crack below a hypothetical neckline and this becomes the right shoulder, yeah, potentially. But at this particular moment, we're still holding up and trending very nicely, and there's no real cause for concern on Netflix. Now, let me have a quick look at Tesla too. I mean, just pay attention first of all to the amount of candlesticks here with upper wicks. We've got 1, 2, 3, and 4. We are also back testing this very important support turn resistance area. So what I was speaking about last time in the market address or the individual stock update is what's going to happen at roughly this 300 handle. You can see on my screen we're trading at 302.67. If we see a definitive reversal, if we start to see this support area crack, we can almost confirm that we are going to push below 250. So what I'm doing in the spirit of being non-sort of biased in direction, okay? We can go through and analyze the markets and come to a bullish conclusion. That's clearly what is happening right now. We can go through our top 12 list, or the majority of it at least, and say, look, overwhelmingly, the majority of these companies are still bullish. However, Tesla, I can say, is sort of that outcast. It's not bullish whatsoever. If anything, the chart pattern suggests that this could be entering out of a very, very severe correction. After you see these types of sell-offs after earnings or waterfall sell-offs, the quick move back to the upside to retest the pivot, generally it fails, okay? That is my experience in sort of watching a lot of these sort of play out and form and move through the process over a number of years. So first of all, for Tesla, am I wanting to trade it above 312? No, I'm not. Am I looking for a rollover? Yes, potentially. Will it come? I don't know. But at the same time, I mean, for now, I'm not really prepared to do anything. I mean, really, I'm quite happy with a lot of those other positions that I've already sort of spoken about just a little bit prior. But if we start to see some engulfing candlesticks, if we start to see Tesla really push away from those exponentials and begin to crack this neckline close to 280, well then my concerns that I have on Tesla right now, first of all, will be justified. And then, of course, I'll start speaking about Tesla as to a legitimate short entry, even potentially moving what is now a default solid line, which means, yep, it's a solid entry at 272, potentially higher. But at the moment, the last thing you want to do is trade bearish against that of a rising market. We can be cognizant of the fact that this is a bearish chart, but the setup just isn't there yet. We need a little bit more time and a little bit more analysis before we can go gung-ho on any shorts on Tesla confidently. All right, so that's going to do us as at this Wednesday afternoon market recap. Again, any questions, please email me. Address is in the comment section. I wish you all very well. I'm going to say farewell to you. Enjoy your Wednesday evening, and I'll be back with you either later in the week or I'll see you in the weekend or over the weekend on Saturday in that recorded pro analysis class. All the best, everyone. Have a great evening. It's James signing off on behalf of Pivot Point Trading. Farewell.